Hi, I'm Hedgeye founder and CEO Keith McCullough. I'm excited to announce the Hedgeye on the Prize tournament. I challenge you to compete in this simulated investing tournament to win some serious money. We'll be awarding weekly and monthly cash prizes along with the big grand prizes. Along the way, we'll teach you how to take your investing to a whole new level. I hope you'll join us. I'll be coaching you every step of the way.
And look, I know it's really easy to look at Squid and say it's an anomaly, it's a one-time event, so we should adjust for it. And while it's a huge success, you could say it has to do the same thing about Tiger King, right? Like, the point is that we don't know when hits are going to come. And Netflix is producing a lot of content worldwide, and over time, they're probably going to have one or two surprise mega hits a year, which isn't a bad thing. Is it incredibly efficient from a cash flow perspective? No. But if you're Netflix, and you have ambitions of, world domination for scripted content, it's kind of the only way, right? And so that's, clearly their strategy. And we can poke holes at all we want, but that's, it just is what it is. Subs are going to be leading, and that's why the market is not going to really care about rising content expenses as long as it's translating to subs. I mean, stepping back, like this time last year, the street was at 28 million, a little under 30 million subs for fiscal year 21, and now they're come all the way down to 18 million, right? But the stock's up. I mean, for anybody, and like we've been bearish on Netflix forever, like that is an absolute, like, FU to the short sellers, right? Like, it's just crazy. And meanwhile, the sub trajectory is going to continue to get better, and estimates are not going down.
It's not unlike how I explained the pandemic call on Quad 4 on January 30th of 2020. Like, when the base effects are your enemy, in that case it was, it was the pandemic that pulled forward a recession call because we were already slowing towards the low end of the cycle or a recession, either or, it didn't matter. And it just was a very obvious, what we call in fractal math, an emergent property that developed pretty quickly. Same thing with Squid. I mean, it's like the base effects are getting easier. They just had a home run. That makes it easier to be long it. I mean, because now it just makes it a higher probability that you get a reacceleration on subs, and that's all that matters. I mean, it's when you really boil it down, I mean, getting to just saying that in 30 seconds or less is the hard part. I mean, it'd take you a whole career to appreciate how simple you can get in terms of simplifying the complex with 100%, rear view mirror or an ability to look back, and that's just what it is. So I think it's a good example. What's happened from just with the stock is that the volatility's come way out of this thing. So now the range is going to tighten. It's going to consolidate. My risk range is about as tight as it's been on Netflix going back years now. And that's, again, it's the inverse of the volatility that they had when subs were slowing. So I think did a really good job pivoting to the long side. It doesn't have to be best idea. Like, people can make up their own minds. I'd buy the damn dip at the low end of the range on this all day long and sell it at the top end of the range, or some of it at the top end of the range all day long. It's an easy one. I mean, and if it looks less easy in vol space, I'll let you know.
Great, thank you.
Yeah. Very typical of a stock to price in the future and then go down a little bit on the news, consolidate, and then go back up again. It's exactly what JP Morgan did, by the way. Another good example of the same signal, but different stock. All right. Thank you.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.